Money FM 89.3. Best of breakfast. Companies to watch.
All right, joining us today is Dan Ko as usual to tell us what to watch out for.
Good morning, Ryan, and
morning.
good morning, listeners. Of course, welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends to risks, as well as hidden gems or warning signs to steer clear of. So be part of the conversation, 8855-0893, and tell us whether you think it's going to be hot or not. Ryan, you ready?
I think so.
Okay. All right, Ryan. Now, we're turning our attention today to one of the world's largest banking and financial services organizations. Do you have any clue yet to our listeners? I know you've seen the notes, but I'll give you about 3 seconds to think about it. And it is widely regarded as one of the industry's most valuable brands as well. Well, we're looking at HSBC, which boasts more than 6,300 offices in 75 countries and territories worldwide. So the reason why I've brought this company to our attention today is because they've just recently announced a $3 billion share buyback after reporting a 25% fall in first quarter profit on Tuesday. And that also came as they warned of a possible hit to loan demand and credit quality in the face of course, US President Donald Trump's global trade war. First things first, any surprises here, Ryan?
Yeah, not a big surprise. I think this is something a lot of banks are going through. Very similar headwinds, similar issues.
Yep.
So for HSBC, I would imagine it's also going to be the same.
Yeah, hit on margins is definitely what they're starting to feel. I mean, the London-based bank had reported first quarter profit before tax of $9.5 billion. That compared with $12.7 billion a year earlier. And of course, this was mainly due to one-time charges related to business disposals in Canada and Argentina. But Ryan, there's still some positives here. It still came in higher than analysts' expectations of $7.8 billion for Europe's biggest lender by assets. The corporate and institutional banking's biggest revenue earner after combined with commercial and global banking units, it delivered $7.2 billion in revenue in 2024. That's up 11% from a year earlier. Meanwhile, its international wealth and premier banking operation had posted a 12% increase in revenue during the same period. And HSBC has also left its performance target unchanged of a mid-teens return on average tangible equity for each of the 3 years from now, this year to 2027, having hit 14.6% in 2024. Now, on the back of that, the bank did report $900 million in expected credit losses for the quarter, including $150 million to reflect heightened economic uncertainty. On top of that, it added that it could also book an additional $500 million in a scenario where higher tariffs lead to a slowdown in global growth. I think we're seeing the same note and the same projection in terms of how bankings are navigating these waters that we're seeing amid this trade war with Donald Trump, don't you think?
Yeah, I think it's quite encouraging as well with the outlook that they committed to earlier. They've not changed it despite all the headwinds, potential headwinds and uncertainty. They are still holding on to their earlier projections. So I would take it as a bit of an up or a plus here.
Yeah, certainly. I mean, it does bring to light at least how these banks are trying to navigate the current uncertain economic environment that we're in, and it also underlines the challenges that it faces after a strong run of profit in recent years, as the risks of a sharp global economic slowdown from Trump's broad tariffs has started to hurt corporate customers. And according to HSBC, they're facing heightened uncertainty, in particular from protectionist trade policies. That's creating lots of volatility in both economic forecasts and financial markets, adversely impacting consumer and business sentiment. But it certainly helps you feel a lot better to know that at least they kept their performance target unchanged. And with plans, to keep its growth and expenses to 3% in 2025 compared with 2024 costs. It also said it was committed to reduce annual costs by 1.5 billion by the end of 2026. So analysts have regarded, HSBC's new unveiled share buyback as a positive surprise as well, with some even describing the earnings as strong, noting higher activity in Asia and specifically Hong Kong wealth, which posted 29% growth in new customers quarter on quarter. That being said, I'm still going to go with a heart for HSBC Holdings, given how they've projected relatively muted but also positive earnings results. What about you, Ryan?
Yeah, they're quite optimistic in that sense. They're playing down the threats from tariffs.
Yeah.
Then you've got a share buyback, which pretty much means they are going to be spending money to buy back their shares. So not putting aside cash for buffer in that sense as much as you might expect with all the uncertainty. So looking quite bullish. I'm not sure whether to call it bullish, but at least they are quite confident to some degree with what's going on with the global backdrop.
Yeah, it does seem that investors are cheering on the news as well. I mean, the stocks were up during the Hong Kong trading session, up by 3% to finish off yesterday's session at $88.35. And year to date, Ryan, HSBC Holdings is currently trading up by 16% as well. We've got tip ranks, Yahoo and Barron's as of the 30th of April, giving it a strong buy rating. And that pretty much wraps it for our analysis of today's Stock in Focus, HSBC. Now, Ryan, did you know that HSBC was founded in 1865 in Hong Kong to facilitate trade between Europe and Asia? So, with that in mind, can you tell me what's the bank's full name?
Let me Google it now.
No, don't Google it, Ryan. Give it a try.
Hong Kong, Shanghai.
Okay,
now I'm B now. Banking.
Good. C.
Corporation?
Very good, Ryan. The full name is the Hong Kong and Shanghai Banking Corporation Limited. Well done. So, why do British people pronounce the word British like they do?
I don't know.
Because they drank all the tea. The tea, Ryan. The tea. And that's all we have for HSBC.
Hey.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.